Hi everyone, today let's talk about PPI data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So PPI pricing fell by 0.2%, the expectation was 0.1, and we came in at minus 0.1, so pretty big move down on PPI, and this was met with great demand from markets. Annual basis PPI rose by 2.25%, and in the pre-market, markets jumped on that move. And then looking at the sectors, we can see fuels and lubricants surged by 12.2%, but they were offset in a fall by airplane passengers of 4.3%, and the overall energy index tumbled by 4.8%. So overall, this is a very good read for inflation. Moving over to fear and greed, we dropped to a 43. Yesterday's read was a 46, so that actually stepped down pretty decently. Markets have been mixed for a while, still seeing extreme greed on momentum and extreme fear on strength and breadth, so really no change here today. Put call ratio, still in extreme greed. VIX not showing any movement at all, and then safe haven demand as well as junk bond demand moving into the fear side. So that's pretty interesting, the moves that we've seen on interest rates after the FOMC yesterday and then the inflation read that we got here today. Moving over to seasonality, you can see we're starting to get into that bearish period. The low of the month is all the way out here around 24 to 26. So this is an initial dip low, slight bounce, and then a new low before we start to see a rally into the end of the month. But we really haven't seen that dip low at all yet so far. So you might see that follow through more to the downside towards the end of the month or about a week and a half from now. Moving over to the economic data, you can see that core PPI number month over month was 0 versus 0.3 expected, big step down. But the month over month is what I was talking about, minus 0.2 versus that 0.1 expectation, pretty significant steps down there. And markets really like that. We didn't really hold the gains, but they did spike on the announcement. And then looking at Friday here, we have Michigan data. We'll see how that comes out. And that'll pretty much wrap it up for the week. Moving over to max pain for the end of the week, it's still down here at 534. Total options up to 1.5 million. Put call ratio still very high. 540 is getting to be a little bit of a put wall. Call wall is now up at 550. You have calls and puts sitting at 534 and 535, so that call wall there at 535 doesn't mean as much to me now. Top of the puts, like I said, 540 to 544. Could see a finish pretty much right where we are, maybe a little bit of a move lower, slightly below that 540 area potentially, just to get below this little bit of calls here from 540 to 545, but I wouldn't expect it to be too deep of a cut. Moving over to the charts, looking at the S&Ps, you can see we dipped in the mid-session, rallied into the close, held a slight gain, 0.2%. Momentum in RSI still bullish. Didn't hit that upper trend line. That was sitting up around 545. Didn't quite get there. Sitting up around 546 now. We'll see if we can get into that zone. Actually looks very similar to the previous consolidation. Sideways choppy action. Held the trend and then pushed to that trend line. Now we're getting more sideways choppy action. It is worth noting that that low of day was lower than the previous wick low that we got right at the end of the session, which is interesting. And I went ahead and added some levels, so 540.34 right at these wick lows here, and the wick low from that Wednesday session, and then right at the wick highs, 544 consolidation there, and then right at the highs here from that Monday session, that's 535.72. So right now we're in this consolidation waiting for a move one way or the other. Moving over to the Tasty charts, you can see that upper ATR is now at 545.34, so pretty much the same region as that other trend line that we talked about. This is going to trend a little bit higher tomorrow, 546.30 or so. Momentum continues to swing towards the bullish side. Saw a little bit of volume coming through on yesterday's candle. See if this can continue to grind along that upper ATR. This is typically a zone of resistance, and eventually it does break down to the middle of the range, which is around 530. So just being cautious, trying to take advantage of this very slow grind that we're getting. If this starts to break down, it is worth being cautious and looking for those quick outs if you need to. Moving over to the Qs, very similar thesis, dipped mid-session, rallied into the close, rallying a little bit after hours. I think that's on Adobe earnings. They did quite well. Holding that trend line here, you can see it on the daily chart, momentum and RSI super bullish. RSI is extremely extended there as well at 77.24. Continuing to go higher than this previous high, so you don't have that same divergence anymore. Much higher price, much higher RSI read. So trend, it is still healthy, but definitely extended. And like I said, it's up about 50 cents after hours. So that looks good as well. Overall, everything still looks bullish. But like I said on the previous chart, you do have to be careful. We're extended and there will be a bearish period eventually. You just have to be careful. You just have to keep an eye out for those moves. And then in terms of levels, 477.69 added a level there, and then 471.93 added a level there, and then one here at 468.05. So right at the high from the Tuesday session, right at the low from the Wednesday session, you can see that gap in there. And then we got another gap higher here, and then I put that last level at the top of those bodies of the candle here today. So see how that plays. If it continues to break higher, we'll play it that way. But right now, sideways consolidation, just like the SPY. Moving over to the Tasty charts, you can see that same setup definitely extended. Upper ATR 474.70, finished the day around 476.70, so way above it. And then after hours, like I said, we're up a little bit more. Momentum swinging to bullish. ATR stops continuing to step higher. That's at 458.35 at this point. And then looking at the 4-hour chart, again, extended right on top of that upper ATR 476.47. ATR stops right now 468.22, but we did see a big step higher on that last candle on the volume weighted MACD, so some volume coming through there. Definitely interesting. Again, usually when you get here, there's a little bit of a pullback. Could be in time, could be to the downside, but right now it looks like a pullback in time. We haven't really seen any break in structure. Moving over to the Russell and the Dow. So the Russell did catch a big wick right around this trend line here, still holding that 201.88 area, through a big wick below. Like I said, touched the lows actually from that Friday, the 7th session, closed right at the middle of the candle, so some indecision. I would really like to see it hold this level tomorrow and then push back up. I expected some of a pullback. I didn't think it would be this aggressive, 0.87 to the downside with $1.78 to the downside on actual price action. It's falling a little bit after hours there as well. You can see it on the hourly chart, big move down to open. You can see that PPI candle, big wick to the upside, immediately gave it all back, holding that trend. But like I said, 201.88 is interesting. I would have really liked to see that 200 SMA hold here after we got back above it for PPI, but just couldn't do it. And then similarly here with the Dow, throwing another big wick to the downside, similar to what we saw on the Tuesday session, right in that same region. It was negative on the day as well, 0.21. Looked pretty terrible when it was down in the 384 area, but was able to gain most of that back and closed as a doji. Momentum stepping back to bearish. RSI doesn't look super great, so tech still leading markets, whereas the Russell and the Dow are fading a little bit here as we head into the Friday session. Moving over to stocks that moved today, we have Adobe and Supermicro. Adobe was up 14.5%. It is up 14.5%, right to that 200 SMA on the 12-hour chart. Massive jump on their earnings. Obviously bullish momentum. This is a stock that's been fading for a while. You can see it topped out back here, back in the 636 area, and then we fell all the way down to the 430s. And now we're back into the 520s. So big move on earnings. This can absolutely be a change in trend. Of course, everything's going to be extended in the short term, but that doesn't usually mean anything when you have these big moves with these big catalysts. So Adobe looking a lot better here today. And then Supermicro getting a move after that Broadcom earnings yesterday. 12.5% back above my level here at 856.79. Super important level. That's the wick lows from 20 March. Now we're back above that. If this continues here, could potentially see this push back towards the 12,000 area, which would be an absolutely massive move for Supermicro. This company's been on a massive move already. I'm sure you guys have been following it, but this could be another big move here for Supermicro after this fading consolidation, low, higher low, and now push on the back of that Broadcom earnings. Moving over to the Mag 7, you can see it was up just barely 0.04, again touching that same level, the same wick high from yesterday at 265.08. Momentum is bullish, RSI is bullish, continues to swing. Like I said, this could be extended for sure. We're at a 74.62 on the RSI. You can see it was going parabolic over the last couple of days. Doesn't mean that it can't keep going. You got some trend all the way up at 284. We're right now at 265, so could absolutely go there. But this has been resistance for the last 2 days. Might see a slight pullback or a pullback in time. After the move that we've seen here, we got all the way down to the 218s, and now we're back up to that 265 area. Moving over to Apple and Microsoft, up 0.55 and 0.12 respectively. Apple continuing its 3-day streak. Microsoft is on a 4-day streak. This is price discovery for Apple. The wick high actually from yesterday was up around the 220s. Didn't get anywhere near that, so that's interesting. Looks like a doji. Could be an island reversal potentially. It is extended for sure. And then Microsoft got a trend line sitting up here around 450. Haven't gotten anywhere near that over the last couple days, but momentum and RSI are both bullish, and there's still an opportunity to get there in my opinion. Moving over to Google and NVIDIA, here we have Google down 1.57%, so that ended up being an island reversal from all-time highs, hit that trend line, gap lower right to the 21, momentum fading, RSI fading. This could be a consolidation, prepping for a dip low down to that 55 EMA, down around 167.40. Definitely does not look as good as it did yesterday. Still waiting on this 21 and 9 as well as VWAP to break, so that hasn't happened quite yet, and we have seen moves like this. So watching this closely, I think there's probably going to be a break eventually back down at least to that 170 area, and then we'll see if we hit that 55 EMA. And then NVIDIA, again, semiconductors were all moving higher with Broadcom yesterday, and NVIDIA was up 3.5% right to that next trend line. Didn't quite touch it in that 130 area, but momentum and RSI are both bullish. That is probably going to be a zone of resistance. You can see it here, touched that trend line, pulled back, consolidated, and then pulled back some more. Rallied from that low right back to the trend line. We'll see what happens here. Are we going to get a consolidation, or are we going to get a bigger dip low? Who knows? Of course, this is still NVIDIA, so it is super bullish, but just something to consider. That is a powerful trend line. Moving over to Meta and Amazon, you can see Meta was down 0.93, Amazon was down 1.64%. Talked about that being a bear candle yesterday. Couldn't get to my level 188.61. Pulled right back to that 21 EMA. That's not great. Momentum's breaking down. RSI needs to hold that SMA. If it doesn't, this could break down right back to these previous lows around 174 potentially. This has been a consolidation for a while, and if it breaks back through this mid-range, like I said, I think 174 is possible. Meta, again, couldn't get that 520 level. I thought we could off of yesterday's candle, but then we got a down move. Momentum fading, RSI pulling back. Might see this push back down towards that support around 489.67. Hold that level as a higher low and then push to 520. Everything still says this is just a pullback in an uptrend, so being patient on Meta, watching that one. Moving over to staples and discretionaries. Staples was up 0.13 after being down quite a bit, down to that 76 area. It's hanging in there, slightly higher low potentially from this previous low. Could be just a consolidation now, where you have a high, lower high, and a low, higher low, so consolidation, sideways chop could be interesting. And then looking at discretionaries, hit that 180.10 level again, could not hold above it. Momentum still bullish, RSI still bullish, and it is right in this resistance range. Need to see it hold above that and then potentially push towards that 185.36 area. But right now it's not doing that, and it did reject from that zone once again. Moving over to transports and technology, continuing to watch these two sectors. Transports down 1.6%, absolutely giving back all of the gains and then some from yesterday's candle. Absolutely not great. Holding that 200 right now, that's at 63.92. And then technology up 0.79, still above that trend line here. Usually when we get here, there is a pullback, just like we saw last time, but that doesn't mean you can't grind higher for a long time. We hit it back here in January, grinded along that zone up until mid-March before breaking down. This could be another iteration of that, holding the zone, grinding higher for a couple of months, and then eventually breaking back to the mid-range. So we'll see how it plays out. Right now, still looks bullish. Moving over to oil and gold. We got oil down just a little bit, but it's holding the same zone, 0.68 to the downside. Momentum still bullish. RSI still looks a little bullish to me. 77.50 is an important zone. If it breaks through that, we might be headed back down to the 76 or 73 area. You need this zone to hold if we're going to break higher. It's not doing it yet, so just waiting there in the mid-range on oil. And then looking at gold, gap down, fell. This doesn't look super great to me. We're back below all the short-term EMAs and SMAs. 144 sitting down there at 200.09. Next level for me, 202.25. This might be a bit of a breakdown. We're really hoping to hold this zone, and it still hasn't quite broken down from this low back here at the beginning of May, but this is concerning for sure. If this starts to break, it's probably going to go quickly, just like the move that we got here happened so quickly. Moving over to RIOT and Marathon. RIOT getting that continuation move here today, so that was good. Up 3.2%, looking to push towards that 200 SMA at 11.67, or potentially the 144 all the way at 12.27. Could be interesting. Last time we got here, pushed all the way to that zone and then rejected, so still might see some rejection from there, but momentum is bullish, RSI is bullish. This should have a little bit more follow through on it based on the price action. Still need to see it get above 11.30, which is the highs here from mid-May, but it does seem like it potentially could do it tomorrow or the next day or the next trading day. So we'll continue to watch that one. And then Marathon here, rejecting off of that downtrend line that we've been watching. Negative 1.5% momentum, still neutral. RSI bearish. This is probably going to roll back down to that 1875 level. Unless we hold right here, get above the trend line and break higher, could happen, but right now it looks like a rejection. Moving over to the dollar, this is the concerning part for me. The dollar was going higher on the day, ended up closing about 0.5% higher, held this trend line here, tested that yesterday, held that same open, rallied up. If this gets back above 105.50, I think that's going to be quite bearish for markets. So watching the dollar closely. If this continues to rally, 106.8 would be my next level, and that should bring lower markets with it. Even with all of the catalysts that we've been getting, I just don't think markets can continue to hold up, especially so extended, if the dollar starts to go on a run, similar to the one that we saw here in mid-April. Moving over to the 2-year and the 10-year yield, we got the 2-year going down 1.16 and the 10-year 1.58. Continuing to wick these same lows, didn't get lower than yesterday's wick low on the 2-year. 10-year did get a little bit lower, and it did close quite a bit lower as well. So we're back down into the 4.25 range, so that's going to be a little bit bullish for markets. I think that's probably why we're holding up so well, even with the dollar going a little bit bullish here today. Yields have pulled back pretty dramatically. Who knows where this 10-year is probably headed, potentially back down into the 4 range. If we get there, that could keep markets stable. 10-year probably headed to that 144, down around 4.63. We'll see how that plays, but momentum and RSI on both of these are bearish. Moving over to bonds, you can see J&K slightly positive, 0.02, basically nothing there. But TLT, 1.47, absolutely massive. Another move higher, right to that trend line. You can see this structure starting to form. Low, higher low, higher low. Touch those levels a couple times. We're right at that upper trend. Could be interesting if this breaks out. 196.50 would be the next level, absolutely could. In terms of structure, you would expect a slight reversal potentially, but it doesn't have to happen that way. This is a very tight range right now, so we'll see how it plays right now. Definitely starting to see that change in structure. Bullish trend on TLT. I do like how this is shaping up. And we are also back above all the EMAs and SMAs on the daily chart, so haven't seen that in a while either. We've been struggling with that 144 EMA, but we're back above it, and this does look quite a bit more bullish again here today than it has over the past several months. Moving over to volatility, you can see move index basically flat, fell a little bit, but right in the same range. VIX, same thing, wick to high, fell back right in the same range. Momentum's a little bit bearish there on the VIX, which is interesting. Did go lower like we thought it would. 1177 is the level. We'll see if we touch that and then what happens there. But right now, this still looks bearish. Probably going to chop here for a few days at least. Moving over to my accounts, I did make a little bit of money. My main account did fine. With the NASDAQ being up, sold some puts again for tomorrow's session. It's basically flat after hours here, just a few pennies higher on that Adobe move. Doesn't have a huge impact on the NASDAQ. And then I did roll out this call here to 471. That went negative on the day because how bullish it was, which is still fine. Max profit there is around that 477 area. So just trying to collect a little bit of money, but still be protected to the downside on those shares. Like I said, I think we're extended. I can be patient here and roll those up over time. And then IWM fell 1.8%, managed to mitigate some of those losses, but it was a little bit choppy. So that was not super great. I sold a 200 put for tomorrow for 74 cents at 52 cents profit there. And I still have a call here for 202 for 5 days from now for $1.49 on those shares. So still trying to collect about 0.75% over the next couple days. And that's falling a little bit more after hours down to 201.50. So we'll see how that plays out. I'm down at 200 on these puts, so I should still be in good shape there. But these covered calls could give me a little bit of a problem if the IWM continues to fall into tomorrow's session. Let me know down in the comment section what you think of the inflation data and how it's going to affect markets at these levels. Is it enough to keep pushing higher, or are we just too extended? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.